Great. What's up, everybody? This is Derek Mashinsky, your editor at the Gold Investment Letter. I have not said hello to our free e-letter list in a couple of weeks, so I apologize for that. But I've got some good stuff for you all, I think. Today it's going to be brief. I just wanted to kind of touch base, give you a few thoughts on what's going on in gold, silver, metals, and mining stocks, and not dig into too much in terms of there's a lot of these companies that I've covered in the free e-letter over time that I'm going to get to. Today's already Wednesday, but I'm going to get to it this week. And what I'm going to do is, essentially I'm going to walk through a lot of the smaller companies that I've brought out and covered here. The bigger ones, like McEwen Mining, for example, that we've covered and held for a long time, is doing much better. I am going to include in this email body, we just had part 2. I believe I might have shared part 1. I'm not certain, but I believe I did share the Rick Rule interview with everybody about a week and a half ago. From Real Vision. This is a series that I'm doing on this Real Vision platform. Anybody who's a serious investor in the world knows about it, unless you're in Canada. For some reason, they just really haven't penetrated the Canadian market. But it's probably the largest pocket of untapped capital in the world to bring over into our small, tiny mining sector. That's why I'm really active there. Because when we do get into a bull market and things start to get exciting for us, which they have not been for literally 3.5 years now. August 2020 was the top of our mining market and bear market, which I believe, to Rick Rule's point in the interview that I did, the bear market officially ended in Q4 2022. So, but not many of us are very satisfied with this bull market that apparently has been here for the last 6 quarters, because it just has not produced much in terms of returns, except for very selective deals. And then on the low end of the market, I would argue that the bear market is at its worst, and was at its worst back in like November, not long ago, when we saw this consortium of the trend following bank algorithms, the bear market, the leaning out of the cycle, the tax loss selling, all of that stuff. One thing I was wrong about, I'm just going to talk about a couple of things I was a little erroneous on. But let me just tell you something also, guys, for those of you that are new, we have thousands of new members, and welcome to you. The Gold Investment Letter has been very active in bringing in new blood, because I'm a massive believer in being, and you're going to see it, because I think depending on if this blip we've got right now sustains or not, regardless, we have a long-term strategy here at GIL, certainly for our elite and premium members. We're planting seeds regularly, and you do have to pace yourself, because you can't put all of your eggs in a sector like this and then have to wait too long to where you might have a problem and your daughter needs a car, or you got to pay your rent and you got to puke out some of these stocks at the lows. I've been there, and that sucks. I'm not looking to have anybody do that, but we have a lot of institutional investors, fund managers, family offices, brokers, high net worth individuals that listen and watch and read at the Gold Investment Letter. So that necessarily wouldn't be your problem. But at the same time, we all want to make sure we're pacing ourselves until we get more evidence that the bull is really here. And I think that has possibly started last week, with what we've seen with volume kick in the indexes and gold now. Let me share my screen here. I want to share a few different charts with you guys. But gold's now at 21.20, it's at 21.47. So look at, 1 year up 18, 30 days 6%. It doesn't feel that way, right, when you look at the mining stocks. But I want to point one thing out for you guys. Look at the gold chart. This is the monthly. I always point this thing out. This is the monthly chart, the 10-year. This is what matters. This is a very important chart. And I've talked about this. And listen, let me just say this. I know what the fuck I'm talking about with regard to what is going to happen to the price of gold when it breaks these all-time highs and does it for certain, which it looks like it is right now. But what I've been benching this on are monthly closing highs. We need monthly closing highs because look, we had this blip in December where it looked like it was taking off and then we closed back down. But here's the good news, guys. Let's look at an annotation where we're going to circle. This was December. Right here, this was November. So November closed around 2050. Look at all the previous spikes up. These spikes up on the monthly were not closing highs. The closing high was right above 2000. That happened in 2020. So we've literally had all of these. This is not including this month right now, but it's certainly off to a good start. November, December, January, and February, all-time closing highs in gold. Very subtle. I've talked about how I want to see 2100 closed above on a monthly basis to confirm my sentiment that we are now going to see a bullish move, a hard move, a big move up in the price of gold, which we are going to. It's just a question of timing. And it may be starting right now, but we've also got 3 weeks until the end of the month. But if gold goes into the 2200s, even like early in the month or in the middle of the month, like I think you can't wait because we've already had 4 closes at all-time highs. If we had 2 closes at all-time highs, which we did then in December, I started to think that's partially why my thesis of that, we were going to see some of these smaller ones and other companies that were beaten down for tax purposes in a year like 2023, where everything was up. This sector was down. People were just selling things like throwing the baby out with the bathwater, and that we would have a nice spike in January. Well, a little bit delayed, but here we are in March, and now things are starting to move. The problem that we have with junior miners, keep this in mind, is that they're so bombed out with such low volume that the way that I play those is I buy out offers and go high bid and do that. Like I'll go in for a day, I'll knock a little bit out, small position, I'll back off, wait a day or two, come back, take out all the offers, go high bid, see what sucks in, and continue to do that. And some of the positions that I have taken me months to years to build. And it'll take me a long ass time to get out of some of these positions too, unless we have a very big spike in volume, which happens during bull markets, which we will see soon. We're 3.5 years in. I don't care what the theses are about everything else. I have a pretty good, I think, purview on this market from an emotionally balanced standpoint, because I don't have all of my money in it. I've talked, a lot of you know that I've been in crypto heavily since, starting in 2016. And, the last 12 to 15 months there has been very profitable. It's kind of saved my ass in the sense that fresh cash, tokens and coins that have gone up 3, 4, 5, 6 times in the last year. I shaved some of that off, send it over, did it all the last 4 trading days, where I sold off some big profits in crypto over to the bank, over to my brokerage account, buying junior miners. I was doing this in the opposite fashion, before at certain points, not with the miners, but with my physical gold back in Q4 2022 and into early January 23, because I had that there for safety, for cash that was ready for an emergency buy at the bottom of the crypto bull cycle. That's neither here nor there, except for a lot of you guys don't like to hear about Bitcoin. I'm not going to talk at all about like crypto in general. I'm just giving you my personal situation and how I'm moving money around and allocating in positions. But the conversation, I've said this for 5 years, if you guys, have been around, more than that. if your financial advisor or you, I don't care if you're a family office, a pension manager, if you have more money than I do or whatever, and you've got a storied career, or whoever you look to, you know, for advice. So like any newsletter writers, any brokers, financial advisors, if you are involved in the gold space and they have not gotten themselves up to speed on Bitcoin, they need to be fired because they're way behind the curve. We actually have something in Bitcoin I believe is very complementary, and I love it. And I'm both very deep in both. It's where most of the money I have been able to invest and accumulate and win. That's where most of it is allocated between those two. So I just am saying that Bitcoin, theoretically, you could look at as the first competitor to gold, which I don't think it is, but it's the first competitor for capital against gold in the spirit of what gold is about that we've had in thousands of years. And so if you're not bringing that into the equation, you don't know what's going on. You're clueless. You're out of the picture. But that wasn't the reason for the video. The reason for the video, I just wanted to say, I'm very hopeful that Bitcoin or gold is about to break hard and fast, because what will happen after a 10-year consolidation like this, and now a quadruple, that's what I've been talking, this is a quadruple. Now it's actually like the 5th attempt. So instead of like a double top, triple top breakout, I mean, this stuff is like bursting to go. Just one more example about Bitcoin. You know, those of you that have been here for a while would know that back in 2020, when I was very bullish on it, it got to the point where I was saying, like, last chance you're ever going to have to buy it under 10,000. Last chance you're ever going to have to buy it under 11, 12, 13, 14. And then I said somewhere around 14, 15,000 Bitcoin. I go, look, if you're not a believer yet, do yourself at least one favor, open an account at an exchange for Bitcoin, fund it, keep it in cash, but be ready, because when it actually breaks that old high of 20,000, these sites will crash. We saw that with Coinbase in the last week when Bitcoin was flying and retail's coming back in. I went on my account and said 0 balance. There's still a lot of, you know, it's an early technology, guys. So, but the point being that I told everybody that we're professional traders. I said, if and when you see Bitcoin go through that old high of 20K-ish from late 17, I'm like, you know, there's a trade there. If it happens on volume, I said that Bitcoin was going to go up 30 to 35% in weeks, couple weeks to a couple months. And that's exactly what happened. It happened even faster. I think it went to 27, 28,000 like in days. But the same thing applies to gold. Gold is not supposed to move as much as Bitcoin. They're complementary. They're not competitors. But gold can boogie. Don't forget. And silver can really boogie. And when we get a confirmed breakout that people know on volume, on a monthly basis, where we close above 21, 21, 25, all that, you know, that number, which I think this month we probably do close over 2,200. That is going to signal to a lot of big traditional finance players that there's a breakout play trade in gold. My targets minimally for gold are, and I'm talking about by the end of the year to first half of next year. Give it 15 months, but it probably happens in like 3 months. Gold's going to minimum 2,600, maximum on the first initial real pop before we have some sort of a real consolidation and or pullback. 2,600 to 3,200. My sense is 2,700 to 3,100, 2,700 to 3,000 is a very safe area. So what is that? That's a 35%, 40% move in the price of gold itself. What's going to happen to the miners? We're going to feel like we're finally in the crypto space and participating with folks. So anyways, I'm not going to get into too much on this video. I just am saying hi. But GDXJ, you know, is ripe for following a big gold move. The Lithium Americas trade that I had that I was wrong on, but then we bought more. We bought that last tranche down here. that one's going to be okay. It was not one that was really profitable, but if you follow along with that, we're going to end up, I think, coming out of this, this should go back into this, 7.5, 8 area. And if you cost averaged in with us, you're going to see a mild profit out of that, even though it was a little too stressful because it didn't bounce the way that I thought. A lot of the smaller names that I've covered here, I'm just going to comment really quickly in reverse some of the things that I've talked about. One of the ones that has been a piece of shit that I probably knew better because of lithium and the pullback was McEwen Mining, got hatcheted. It was so close to breaking out in spite of the trend. I got a little overexcited and went in that one a bit deep when it was up at 50 cents. And it looked like, because they were finding stuff in Arizona and it just looked like a game changer. But then the fact that the sector was so weak caught up with it. And I've not been a big lithium guy, as most of you know. I do like lithium. I think that this stuff is bottoming out. I've got my trades on LAC. I've stuck with my plan of like the cost averaging in, and I'll get out of it. I'm not buying it for a long-term investment at this point. I can't tell you, and that's the daily chart, but I can't tell you on lithium. I'm guessing it probably is going to be the case. So you zoom back to the 10-year, and this thing what we could be seeing is this another normal big pullback in a secular bull market that goes to new highs again. And that's possible. I give that like a 40% chance. But all we need is a bump from an older oversold level to make money on that swing trade. But it's so oversold. So Abermarley got whacked the other day, kind of keeping the expectations tepid with lithium, but I follow Lithium Americas as a leader. Here's the weekly chart. It was just extremely oversold, getting a bounce. We get a bounce back like to even the moving averages. That's what I was saying, like in the 7.5 to 8, 50, 75 area. Our cost average on that averaging down is going to be profitable. So whatever, not the greatest thing I've ever been involved in, not the worst. Max Power is going to benefit from a lithium bottom. If there's going to be another lithium run, Max Power is probably going to go up 4 to 10 times from where it is today, but it did get cut in half on us essentially. And, I'm not happy about that, but they've got their act together. They acquired a uranium asset. They're very active, the guys behind that deal. So if I were you and you own it, you can average down a bit and just sit tight. Lithium isn't my favorite area, obviously, in this whole sector, especially when gold is starting to break out to all-time highs. There is going to be so much action for us in gold and silver. But I do like copper. I do like nickel. The platinum metal groups are very cheap. And then vanadium is my baby, as a lot of you know. Vanadium has tremendous potential. And I'll just say this about, I'll get to in the next update, I'm going to get to the ones I've mentioned, like that also, one of them is down, one's down a little bit. Carlyle, the CCC, the little gold play that just hit a wall and then turned back over. I'll explain that situation to all of you guys on the free e-letter next. A little very disappointing in terms of some decisions made. And then all I did with that one is I pulled back on buying, but I haven't sold any stock. It's more of like a take caution. And, that led to the thing falling back down quite a bit. But again, lots of value in a company like that or others that have, 1 million ounces in the ground, 5 million ounces in the ground, trading for $2 to $3, $4 an ounce in the ground. These are the type of things that are going to pay off very well in a gold bull cycle. I still really like Silver Storm, which was Golden Tag. That one is cheap again, trading in the 10, 11, 12 cent Canadian area, very cheap. I forgot when I mentioned that in the free letter last, so I'm not even going to get into more. I might have just been mostly premium. The two big ones that I'm going to update you on right now, just verbally, are Giga Metals in nickel and Phenom Resources in gold vanadium. Why don't I do this? You can look right into my eyes, okay? Phenom Resources finished a recent financing, a small one, because of the cheap valuation and pricing. It was more of what I would call like a placeholder round of $1 million at 17 cents Canadian. The stock is around 21, 22, 23 Canadian. I participated again in a heavy manner. Rob McEwen participated as well. He's maintained his position as the second largest shareholder in Phenom Resources. I'm the biggest. This is the biggest investment I've ever made in anything in my life. I've never had this much money. I've never risked this much money on any individual deal. Back in the days when I was a broker, you could call me blinded. You know, you're married, you can't see clearly. Not the case, baby. With this one, all I do with this deal is I'm in the background making sure that this company is never going to go broke. It's never going to be in a weak position. In fact, Phenom Resources, symbol PHNM in Canada, PHNMF in the US. A lot of you know that I'm very deep in this, but let me just give you an update. I have to do a new calculation just from when it closed and what actually I put in. I actually was going to put in 150 grand. I did less than that because there was a lot of demand. We were oversubscribed. I don't know how it's going out there for a lot of you. Some people can't raise any money, but Phenom is not a problem. Okay. We've got, and our roster of investors are substantial. In fact, I think in the news release, there were 6 or 8 institutional investors in the round, even though it was small. But anyway, I'm up to, and I'm giving you a close metric because of the fact that I did the math when I was going to do 150, so I did less than that. But I'm over 10.5 million shares and warrants in Phenom Resources. The stock is at 22, 23 cents Canadian. My cost average is over 35 cents Canadian. So I'm down 35, 40% on paper, and only about 3 million or less of the 10.5 are warrants. So the rest have all been paid for in cash. And I've got millions of dollars in this freaking company. I'm betting massively on it. I have never, ever felt better about where these guys are positioned, both on the vanadium side and on the gold side. The goal here, and I'm going to keep this quick though, but this is important because this is a freaking massive opportunity on this. And then I'm going to talk about Giga, because a lot of you are probably just pissed off about that one because it's down a lot. And Phenom's down from, you know, when I've talked about it over the last, you know, 6, 8, 12 months, but not as much as a lot of these juniors, just so you know, it's performed better, at least with going down less. But Giga's been just blasted. And, you know, I look back to, and I'll get to Phenom in a second, but like Giga, I remember when I was taking big profits in crypto in 2021. I don't know if some of you remember that back in like March, April, but definitely like in November of 21, I was taking money off of crypto and putting it into gold, real estate, and mining stocks. And I had Giga as one of my featured, you know, plays that I was accumulating. And that stock was over 35 cents at that time. Today it's at 12 or 13 or something like that Canadian. It just touched 10 and a half, but guess who came in and bought all of it? Me. Me and a couple of folks at Premium and Elite that I mentioned yesterday that, you know, this is a very huge opportunity. But I was wrong about nickel also. So there's a few things that I made erroneous calls on, like in the intermediate term. I was a little bit too bullish on Giga too early. Do I wish I would have waited a little bit? Yeah, but like I don't give a fuck because I'm going to make a fortune on my Giga metals investment. And by the way, like I'm looking at some of the accounts that hold my position. I'm about 2% of the company that I own. On Phenom, with 10.5 million shares and warrants, I'm the largest shareholder with about an 8.5% fully diluted stake. I don't have plans to go over 10%, but I'm sure you're going to see me on one of the future presentation decks as a 9.9% holder. Okay. Rob McEwen at 8%. I don't think he's going to want to go above 10, but that's not a bad start. And we have a lot of our people, some of you too, you know, that I appreciate. Listen, one thing I appreciate about those of you guys that have been around, I get a lot of trolls, you know, that'll bring up stuff from years ago, like Bravada or Timberline, you know, like they've just been dog shit. This is not, you know, good for anybody. But like even with like Bravada Gold, like I hear about that one a lot, you know, because I was very hot on it for a period of time. But the first time I got into Bravada was in 2016, and I recommended that thing at like 4 or 5 cents in GIL here. And it went to 40 in like 6 months. So the mistake I made. So like if you were around then, you were like, oh my gosh, Eric nailed it. He knows what he's doing. When we turned back down after that, and this is what happens with a lot of these juniors, so you guys know, the problem that I have is that if I get behind something and, you know, get excited and I share it with you guys, first of all, I can guarantee you one thing. I never talk about any companies or stocks that I don't own myself. I don't. It's so stupid to me. Why would you want to like listen to somebody? There was one of these big Bitcoin podcasts with these two younger guys that I watch once in a while. And then in the beginning, and they've been around for years. In the beginning, they're doing disclaimers. Do you own any, just as a nod, do you own Bitcoin? One of the guys is like, yes, I own Bitcoin. The other guy goes, no, I don't own any Bitcoin. I'm like, what the hell is anybody listening to you guys for? You're doing a podcast about crypto and Bitcoin and being bankless, and you don't even own any Bitcoin? Are you out of your mind? But anyway, that's aside. Sorry. I will never share things like if you're suffering in a bear market in some of the values of these companies, I am no different. So like Bravada, for example, like I kept recommending it, you know, as it came back down after that taller in 2016. So we got into 17, 18, 19, and the thing was hanging in the teens and whatever. And we financed them a bunch of times. And then it just has turned into, you know, a disaster, if you will. But you're also looking at now, this thing is so freaking cheap. It's so cheap. It's ridiculous. I mean, they have a 1 million ounce resource at Wind Mountain. The thing's trading at like a $2.5 million market cap. You got a 1 million ounce resource there, and they've got like 7 other prospects, a couple of which that are partnered with majors in Nevada. The problem with the Bravada, on the side, just for those of you that own it, and then I'm going to get on to a couple of the comments about these 2 big positions that are my biggest, Phenom and Giga, and then I'm going to give you a comment on the marketplace in general, and then I'm going to shut up, and I'm going to come back, and I'm going to walk through some other things that I think will be very beneficial for those of you that are new. So, you know, Bravada and some of these companies, the juniors, I did a video about this not long ago about the corporate governance and the things that happen in the junior space. We call it like the Vancouver lifestyle companies, where CEOs have like salaries coming in for 3 or 4 different juniors and like, you know, barely any skin in the game in any of them. And, you know, it's just not something that I'm going to get behind going forward. I need, you know, 2 companies is fine. Like if you have something at Phenom, like 85% of his time is Phenom, and he needs it. He's probably going to need it to go to 100, but he has like another small exploration company in lithium, and that's fine. Okay, fine. And he actually participated in the last placement, and it was like 5 directors that were involved in the Phenom Resources placement, which was good to see. But when you're taking salaries from all these deals and you don't have any pressure on you about the 1 or 2 that are like your babies, it's just, you know, it's just the end result doesn't usually end up well. That's where you get the rollbacks and all that stuff. So the best that I can do with you guys is when I assess like a deal and I find value in an asset or a group of assets versus where their valuation is, and we take a position. I do my best to make sure, number one, the people that are running it are not promotional scam vampires, okay? I'm pretty good at avoiding that usually, but I've made that mistake. But the other thing then is like, how good is the operator? And, like Joe Keyes is the CEO of Bravada Gold. I like him. He's a legitimate geologist. He has a good reputation. He's been around for a long time. But the problem with a lot of this stuff too is you can't be good at everything, like people need to know how to raise money. They need to know how to do marketing to get people into their stock, not just kick rocks. And then you have the guys that are good at all the promo and the marketing, and they don't know what the hell they're doing. They're relying on some weird geologist that's telling them all kinds of crap, and then they spin it around. So we deal with that, and I do the best that I can to like shift and pivot. Like if you stop hearing me talk about something after I talked about it, it's usually because I'm pumping the brakes for whatever reason, whether it's the market or some things I'm kind of seeing or hearing that I'm just like. And the biggest thing for me, by the way, is over dilution. I'm an anti-dilution terrorist. Capital structure is so important for our returns. So last comment on Bravada is like they've got such a big chunk, which actually a lot of them are expiring. So that's good. And I talked with them not long ago and I said, quit extending your freaking warrants all the time. I'm the one who owned a big chunk of the last warrants that Bravada Gold extended a year. I said, Joe, we took our shot. We had the time with the warrant. It didn't work out. Let him go. I'm not saying keep mine active and not everybody else's, but you got to let those things roll off the balance sheet because otherwise Bravada has such a huge stack of warrants and options that are exercisable between 12 and 15 that it will make it very difficult, even in a bull run, for that stock to initially at least get above those prices. But anyway, those are other topics, but I'm just giving you thoughts about how I think about and how I analyze and how I pivot and how I try to be flexible with some of these plays. But like if you're a troll out there who all you do is talk shit about like stocks that we had from years ago, listen, I'm going to recommend you just get off of the list. Unless you have an open mind, to like going forward, because my career in this area, I've made a lot of money in general and for a lot of different people. But again, it's like, when do you get in? When, do you buy after things run up? Maybe we had bad timing, like with a market, something's coming down and I'm still, heavy in it and like it. And you take my opinions and you get involved, but then it's like, we're a 3.5 year bear market. And that's really dictating the results. And you're just like, you could throw that on me. Or you could probably a little bit more fairly be like, this is happening across my portfolio. Is this guy going to do anything that's extraordinary in making a pick here or there that's going to end up making this all go away? I can tell you that my track record is such that, yes, that is bound to happen. And I've had probably one of the biggest dry spells of not having a 10-bagger in this newsletter. I don't know if it's been every year, but certainly every 18 months to 2 years. Bull markets, bear markets, we have 10 baggers, 20 baggers, 30 baggers, and it's been a bit. So I think I'm overdue. So like if you have an open mind and you're down on that stuff, the most important thing I think for everybody is to determine, like, do we want to put more money in this sector? Is it worth it? Is this still a cyclical sector? Is there a bull market happening or coming that we can take advantage of all this? And then if so, what do? You need to be putting fresh cash to work. Don't do it in my ideas if you didn't like my ideas, but do it for yourself. And if you don't think it's ever going to come back, then what are you doing? I would highly recommend you don't just start chasing crypto after it's gone up so much, So I'm digging in. I'm taking fresh cash from other investments that are working and other income, and I continue to build positions. So with Phenom, with my 10.5 million plus, it's over that. Shares and warrants, I own a little over 8.5% of the company. It's a lot of money for me. I've never put anywhere near that much money in it. We have a situation, and I'm going to wrap this up quick. The largest, highest grade at surface vanadium resource in North America in Carlyle, Nevada. I believe it's probably one of the best from third parties that I've talked to over the last couple of years, from big companies, from people that have no interest in Phenom, validating that this is one of the best developmental assets of a potential future vanadium mine in the world. And it is. So vanadium's been in the gutter too, but that asset is why I sleep at night with all the stock and, investment that I have in this deal. That's my sleeping part. It's also grown, not in the numbers in an official PEA update or a pre-feasibility, but they did a lot of drilling on that, 18 months ago, 24 months ago, like 60 some holes that jack that resource up even higher. And there's a lot more room for growth, and it's at surface. We've got this deal with MK Plus in Tokyo with a breakthrough, solid state vanadium battery that we own 5% of that company just for selling them potentially at market vanadium we produce in the future. That's cutting edge. Vanadium will turn around, and I think it will turn around. It doesn't even have to turn around in spectacular fashion, but if it turns around at all and goes back above $10 an ounce or $10 a pound in vanadium, Phenom's gone to $2 twice when we just had an option on the Carlyle asset and had millions in payments and work obligations. All that's done. PEA is done, expanded stuff. And then on the gold side, I'm so excited. We missed on hole 17 in terms of getting something big to happen there. That was a lot of that was me trying to influence those guys. I was like, let's go for a big one. These are expensive holes. It's a shitty market. We don't have a lot of cash. Normally, most people would have said, we can't do that right now. I get that. But I'm like, look, I'll continue to back you. Miss it or we don't miss it or whatever. There was a lot of excitement from Dave Mathewson, who I'm fully betting on as our gold geologist in Nevada to find us one of the next large, massive Carlin trend discoveries in gold. We're going to get it. It's just a matter of time. And so we plugged 17 of these holes in, and they're expensive. They're like 450 grand Canadian per hole. They take 2 weeks. So we've put in tons of money in that, and we're going to pause now because they did not hit high grade. I thought that after hole 16 with the enthusiasm that those, Paul Cowley and Dave showed, I'm like, let's give it one more shot. But we have other assets that are incredible. Dobbin, Crescent Valley. These are going to get permitted, and they're going to be prepared to be drilled coming up in the spring and summer. So the gold part, but even more importantly, we have money, we have backing, we have a team, I think, that's in congruence with, we're shopping. We're going to scoop up some of the best exploration level gold assets that exist in Nevada. And it's going to expand our portfolio. And when the time is right, this is going to get spun out, and you're going to own pieces of both companies, Phenom Gold, Phenom Vanadium. I'm only going to say one little thing, so please forgive me because I cannot say more, and it might be a little cryptic. But there's something going on that they're working on, and I'm not saying this as like a stupid promotional thing. Personally, I think there's a lot of potential in the next 60, 90 days. Something comes out of left field with this deal and blows the fucking doors off of it. And it's not going to be with things that we expect. I know that they've been working on a lot of stuff for years outside of what we've seen with just drill results. But nonetheless, the value in Phenom is ridiculous. I'm fully behind it. And I'll say the last thing with Phenom is this. Just keep this in mind. People will be like, you're pumping, And yes, I'm talking my book because I put my money where my mouth is. And in this case, it's way too much money, but I don't care. I'm taking it all away with regard to supporting Paul Cowley and the board and the team. at least financially. That's my guarantee, while I have breath in me, which is not guaranteed. And to be a phenom, okay, this is not an ego thing, but I am going to give you a definition, which is my favorite definition of the word. And they have this name, and one of my corporations has the name. It's one of my brands, but it just so happened that they needed to change their name, and it came up and whatever. It's not my company. I own 8.5% of it, but it is not my company. It's your company and our company, and it's not run by me. But phenom definition: someone who is outstandingly talented or admired, especially an up-and-comer. LeBron James, Michael Jordan, Tiger Woods, these things come to mind in sports. What do we have at phenom that makes it a phenom? All I know is that for me, I don't call myself a phenom in anything, but I strive to be in that spirit, like I want to be performing at my best, and those guys do too. And you could classify Dave Matheson certainly as a phenom in the past with how much gold he's found in Nevada. This is a big key to the success here, guys. We've also got phenoms as advisors and on the board on the metallurgical side, which I've learned a little bit more about recently, and that could end up locking in an enormous value with the patents and things that we have. We'll see what happens. And then we've got this vanadium asset that is going to be coveted. There are multi-$100 million grants in the queue with the US government. Paul stays on top of that stuff. This deal's going to work, but I'll tell you, what I'm getting at is that for this to be a phenom outcome, going back to $2, I mean, it's at 20 some cents. That'd be great, but that's not a phenom outcome. A phenom outcome is $20 a share, $10 a share, and that's what we're shooting for. So know in the background, those guys are working. There has been no stagnancy whatsoever. I talk to them, and I'm blown away by the amount of activity that I know that they're not all the details I don't know about what they've been working on, but like the level of activity has been nonstop this past year. And I think it's going to produce something massive. Giga, last comments, okay? For today, I'm going to talk about Giga, and I'm going to share my screen. And you guys that are down in this, listen, nickel's down, all this stuff is down. It's starting to turn around because anything below 12 cents going forward, I will buy all of it up to a 10% holder. I own about 2% right now. I will buy the whole fucking thing, and maybe the company if it gets any cheaper than that. Okay. This is one of the biggest no-brainer situations I've ever seen in my career in terms of the value of the Turnagain asset, which, by the way, Mitsubishi over 18 months ago paid $53 million to buy into a NewCo, not into Giga, but into a NewCo that owns the Turnagain asset. For a 15% stake, they paid $8 million. What's it at now? Let's take a look. Did anything happen with Turnagain? Where did it go? Did it leave? We don't have it anymore. 12 million Canadian. So even if it's up today, sub $10 million market cap for one of the largest undeveloped class 1 nickel sulfide behemoth assets in the world in Canada that, it's got some lower grade. There's high grade there too. Canada Nickel's done a wonderful job, Mark Selby, of bringing in big money there. The stocks perform way better, but he has gotten the attention of the Gigas of the world because a lot of those companies, they're coming in for the exploration upside, not necessarily their legacy asset. Giga has had very high pockets of very high grade nickel that they just stopped on because they're like, this is so massive. We just need to move it forward so that we get another partner and we sell it for a big multiple. And they will. But you've got to buy these things when you don't want to, when you don't feel like it, when you're pissed, when you're whatever. Those are the times, or scared, those are the times when I've had the best purchases in my career. I'm an emotional mutant, that's true. But when it comes to investing, I think that's what you want to be. So I'm ice cold bullish on Giga Metals and Phenom Resources. Nothing has changed. If anything, their stories have improved since you've last heard from me, and the valuations are down. Do what you will with that, but these things are going all the way. And I'm not saying this for any other reason that it's just like my confidence. With the amount of money I've invested in these two companies, I mean, it's just going to be, it's an amount of money that I think I'm going to end up making that is like way above and beyond anything I've ever dreamed of. But I'm very confident it's going to happen. And I'll have new ideas for you guys when we see this bid continue, okay, in this gold and silver market and the miners come to life. You're going to hear from me a lot more. If you want more ideas, if you really want what is making me the most excited, we have 2 or 3 elite member spots open. You can go to the website, you can sign up, and we do a call to see if it's a fit. You could pay, and we'll get a notice. My assistant Erica will line up a Zoom. We'll make sure it's a fit. If it's not, I'll send you your money back. But for those of you that are high net worth and institutional investors, family offices, deal flow. We've been constantly locking in smaller allocations, but 4-year warrants, unbelievable, valuations on these small miners. I mean, we've done probably since last summer 6 to 8 placements, mostly amongst the elite members. Some of those drip into the premium, but the premium members get a lot more content. So if you want to get involved, if you like what you hear today, if you're new, if you want more action, sign up for one of the paid memberships. I love all of you guys, and I'm trying to give you value with my thoughts here, but I'm also pretty inconsistent, as you know, with my messaging. But with the people that pay my salary, I'm much more active. And we have a lot of ideas that I have not shared here because I want to just keep that to, some sort of a manageable level. And I'll be giving you new ideas and everything else. And hopefully a lot of you guys really find value out of reading or listening to me as we go forward. I really appreciate it. And I would just say one last thing, and that is in crypto, I have a newsletter, phenomcrypto.com, that a lot of gold investment that are paying members at least are definitely on that as well. There's probably a split of 50-50 people that have migrated over to crypto to some degree or kicked the tires or put some little money to work or got very involved because I've been talking about it so much for so long. And I was so vocal again about how my fortunes in 2021, when that market topped last time, changed my financial profile forever to this day because of what I did in the bear in 18 and 19 in crypto, and then in 20 in the COVID crash. The decisions I made then when nobody was around and everybody was left for dead in the space, the buying and the money that I allocated then was what dictated how big I came out on the other end. And we're in the same boat right freaking now in this sector. Don't give up on it. Have a great day.